Today, we're going to talk about what is, without a doubt, one of the most incredible turnarounds in modern Indian banking. We're looking at the complete reinvention of IDFC First Bank, a total shift in who they are, what they do, and how they perform, all in just a handful of years.
So, the chase. Look at this. In 2018, this was basically a wholesale bank. A massive 86% of its loans were tied up in huge corporate and infrastructure projects. Now fast forward to today, and it's a completely different animal. It's a retail powerhouse, with 80% of its loans going to regular people and small businesses. So the real question isn't if this happened, but how on earth did they pull off such a radical pivot so successfully?
Well, the whole story really kicks off with a merger. It's a classic tale of two firms that, on the surface, couldn't have been more different. You know, this merger was one of those cases where a perfect mismatch actually became the perfect match. On one side, you had IDFC Bank. It was a big, traditional infrastructure lender, but it was funded by really unstable, expensive money. On the other side, you had Capital First, a super nimble, tech-focused retail lender that was growing like crazy, but really needed a banking license to get its hands on cheaper, more stable funding. So you see, each company had the exact key to unlock the other's biggest problem.
So, they merge, and the very first thing the new leadership does is lay out a crystal-clear blueprint for what this new bank is going to be.
This right here became their new North Star. The mission wasn't just to be another bank. No, the goal was to build a world-class bank, one that was all about ethics, technology, and doing some good in the world. And as you're about to see, this wasn't just some corporate jargon to hang on a wall. It became the actual playbook for every single major decision they made from that day forward.
And that mission led them straight to the core of their strategy. They had to flip the entire balance sheet. I mean, this is basically the financial version of trying to change the engine of an airplane while you're still 30,000 feet in the air.
So, job number one was to find a stable, low-cost way to get money. Now, in banking, the holy grail for this is what's called the CASA ratio. That's the percentage of your deposits that come from current and savings accounts. Why is it the holy grail? Well, because banks pay almost zero interest on these accounts, making it the cheapest funding you can possibly get. And the growth here is just staggering. They went from a tiny 8.7% at the merger to over 50%. That created a solid, cheap foundation that the old bank could only dream of.
So where did all this stable money come from? Well, it came from a huge shift in who the bank was actually serving. Back in 2018, most of the deposits were from these big wholesale clients. Huge corporations that could pull their money out in a second. By 2025, that was totally flipped on its head. Now, almost 80% of their deposits come from much stickier, much more reliable retail customers, people like you and me.
And the final piece of building this new foundation was all about de-risking. The bank went on a mission to pay down its reliance on expensive, volatile market borrowings. I mean, look at this. These borrowings went from making up almost half of their liabilities all the way down to just 8%. The transformation was now complete. They had totally re-engineered their funding from something risky and expensive to something stable and cheap.
Okay, so with that rock-solid foundation now in place, the bank could finally get to the fun part, building a modern, customer-first bank from the ground up. And boy, did they move fast. The branch network just exploded, quintupling from 206 to over 1,000. They built the #1 rated mobile banking app in the entire country. They issued 4 million credit cards, basically from a standing start. And they grabbed a massive 39% market share in FASTags. This wasn't just random growth. It was a super targeted, incredibly successful blitz into the retail market.
All right, that all sounds incredibly impressive. But this brings us to the real million-dollar question. Did this huge, super fast makeover actually work? Let's put this strategy to the test.
Because you really have to ask, right? If you shift so quickly into giving out millions of small loans to individuals, doesn't that mean you're taking on a heck of a lot more risk of people not paying you back?
Well, the data gives us a pretty clear answer. Nope. This chart here shows their bad loans, basically as a percentage of their total business. And that number has stayed remarkably low and stable, just sitting there at around 0.5%. So even with that explosive growth in retail lending, their risk management has been absolutely rock solid.
And listen, this isn't just some lucky streak. The underlying lending model they use, which they got from Capital First, has been seriously battle-tested. We're talking about it proving itself through 6 major economic crises over 15 years, including things like the COVID-19 pandemic. So that really gives you the context for why their loan quality has been so consistently good.
So, the model was safe, but was it profitable? This timeline tells a fantastic story. Right after the merger, yeah, there were some big losses while they cleaned up the old loan book. But then, the new retail engine just roared to life. You can see this steady, powerful climb from a loss of almost 2,000 crores to a strong profit of over 2,400 crores by fiscal year 23. That's a textbook turnaround right there.
So, let's put it all together. Let's take a look at the final scorecard for this totally reimagined bank.
When you lay the numbers out side by side like this, the scale of this change is just undeniable. I mean, look across every single key metric, from what their loans and deposits look like, to their number of branches, and of course, the bottom line, their profit. This is a fundamentally different bank. They didn't just tweak the model, they ripped it up and built a new one from scratch.
And this brings us full circle, right back to their original goal. They said they wanted to build a world-class bank with great loan quality, all centered on the customer. And based on everything we've seen, it's pretty clear they haven't just been talking the talk. They've delivered the results to back it up.
So as we wrap this up, the story of IDFC First Bank really leaves us with a fascinating question to think about. We've seen the what and the how, but this whole journey makes you think about the why. What does it actually take in terms of vision, leadership, and just relentless execution to completely reinvent a legacy institution from the inside out?